We got a lot to talk about today, and we're going to try and tie in what's happening in the market to the overall macro and geopolitics because they're all colliding this morning. So, something we don't have to be as concerned about is, I believe, today's PPI data is not the reason that the stock market is down. How do I know that? Because if these slightly inflated numbers, still lower than last month, in terms of year-over-year data, but higher than expectations, didn't move the 10-year yield. The 10-year yield, as we sit here, 3.98. That's going to show up in housing. That's going to show up in many different parts of the U.S. economy. So the macroeconomic data, producer price index data that we got today, isn't what's moving the market. And so what is? Well, number one, there's still fallout from the overall Nvidia's earnings. Remember, that is a big swath. Nvidia is down roughly, as we get here, about $14, $15 from where it was on right before their earnings release. So there's one problem. CoreWeave also came out with earnings. They're down 17.5%. So uncertainty in the AI tech, large cap tech market is still out there and worrisome. Now, combine that with geopolitics and the fact that crude oil now sits at 66.88. Good news, that's off the highs. Bad news, that's elevated levels due to risks between the U.S. and Iran. So there's geopolitical risks out there that we have to worry about. Why? Mike Huckabee, ambassador to Israel, told their people if they want to leave the country, do it today, which means tensions are high. China also had some similar messages that we're dealing with. So the overall tension between the U.S. and Iran has not dissipated at all. You see that in the price of crude oil. That's one of our warning signs. The continued sell-off of tech stocks and AI-related stocks are another thing to worry about. The economic data is not something to worry about because we'd see that in the 10-year yield, and we're not seeing that. So geopolitics are all over. If we see them dissipate, the good news is crude oil is not as high as it was. It's already off its highs, but there is risk premium put into crude oil. So watch the 10-year yield, watch crude oil, watch geopolitics over the weekend. Might get a little bumpy.